Welcome to another Coffee with Samso. We're here at the UWA Club here in Crawley on the University of Western Australia campus. And today we've got Impact Minerals Limited here with us. The ASX code is IPT. Market cap is 36.98 million as we speak. Share price is 1.3, 1.4. I've got Mike Jones here with us, the Managing Director. Impact has been around since 2006, pivoting to a HPA story as we speak. Mike, welcome to Coffee with Samso.
Great to be here.
Look, Mike, you're a Dr. Mike Jones, worked with Western Mining, like most of us with a bit of grey hair, been around a long time. I think 80 projects or so. Involved in discoveries in the Higginsville Mining Centre as well as iron ore projects in WA. Maybe just give us a quick intro and what Impact is and the projects you have.
Sure. So thanks for the invite, and it's great to be here. It's a beautiful, it is a beautiful location. So, look, Impact was listed in 2006. My background was always in project generation. So you mentioned Western Mining, so I did my PhD studies in the UK, and then I was offered a job in the project generation team for Western Mining in their exploration division here in Perth. So it was like a boyhood dream coming out here in 1988, and worked out of the Perth office, Kalgoorlie, and mostly all in WA, looking for gold and nickel deposits. And it was a great experience, as many listeners would probably know, that Western Mining's produced an incredibly successful number of people over the years because of the environment that they created there. And not just in geology and exploration, but across the whole, mining and metallurgical space as well. So it was a great company to work for, and I was very privileged to be part of that. And but really, that sort of set the scene for my career in the sense that we were always looking for, for exploration for big deposits, world-class deposits. That's really what we've always been about in Impact, and we set up the company with that idea in mind. And it's been an interesting journey over that time. We call it a bit of an emotional roller coaster working for Impact, but it's probably the same in every junior exploration company.
It's a common trait.
Absolutely. And you ride the highs and lows of the market. And look, for many companies, sometimes they're an overnight success, and sometimes it's a 20-year journey to an overnight success. And probably, the standout in that type of environment would be like a De Grey. De Grey was around for 16, 17 years. Out of nowhere, comes the Hemi deposit, and here they are, $1 billion company. And not quite the same, but similar story. Chalice, been around for quite a long time, and Tim doing a great job there. And then boom, all of a sudden, $1 billion company, and really that's been our philosophy. I've been around for so long now. I've seen too many one mine stories go bust. They start off, it takes them 5 or 6 years to get 100,000 ounce a year gold producer into production. They struggle, and then before you know it, they're under. And it's a hard road to go. So we've foregone a lot of opportunities, over the years, looking for the big world-class opportunities. And the way that we've tackled our exploration, and again, something I learned in Western Mining, was to get large ground holdings in prospective parts of the countries that we've operated in. We've been in Botswana, we've been in Turkey, and then back here in Australia. And so during that time, we've always tried to assemble or put together large portfolios, and we're in a position now in Australia. We've got large ground holding in the Lachlan copper gold belt, got a large ground holding in Broken Hill, and of interest, of course, people should know that we're part of the BHP Explore program, one of the 7 companies chosen globally to be part of the first cohort in what is really a groundbreaking sort of revolutionary approach to how majors interact with juniors. That's been a fantastic experience over the last 5 months, and we're still in that. And then we've also put together some large packages here in Western Australia. So our Arkan project in the Wheat Belt lies a long trend from Julimar, in an area that's never been explored before, and we're generating some very significant early exploration results from that. And we'll have quite a bit of news from that project over the next few months as well. So it's always been active, but that whole strategy, putting together these big pieces of ground. But along the way, as I said, we've foregone a lot of projects. We've always been looking for, for the project that could make the difference to us, whether we find it ourselves through exploration or, by acquisition. And so about a year ago, almost a year ago, we came across this HPA or high purity alumina project, which is very unique, and we can talk about that in detail. And once I'd seen the details of it and looked at the economics of it, it was like, okay, this is potentially a world-class deposit. We really need to give this a go. And so hence our recent pivot from exploration into what is now a pre-feasibility study. So it's a big jump, and we're very enthusiastic about it. We've got great hopes for that project, and we're pushing along with that as quickly as we possibly can. So, bit of a synopsis there for you.
Yeah. Oh, look, to add to your conversation about, the time that takes for discovery, I mean, lots of people need to remember Olympic Dam, which is the biggest deposit anyone would love to find,
Yeah,
took decades, right?
yeah,
And it wasn't overnight. So, the big stories come, with patience.
that's right.
Look, the HPA story is really intriguing for me because it's kind of an essential part of going forward into the EV world and everything we need, but it's really not well understood by investors allowed. I mean, especially for my audience out
Yeah,
there, I think HPA is kind of like like rocket science kind of stuff, right? But if you take it all back, it's actually not that complicated.
yeah,
I hope that's the right
yeah.
commentary.
Absolutely. Yeah. One of the things about the high purity alumina space is that it is basically an industrial mineral. And let's face it, it's not quite as sexy as finding a big gold deposit or nickel copper, which is has been the principal aim, for impact over the years. And but it's a crucial part of the whole electrification, the whole EV industry, and the new technologies that are driving the energy transition. But it's a niche market, within that, as a lot of industrial minerals are. So one of the things that we learn at Western Mining in the early days is that when you're in industrial minerals or in any bulk commodity, you have to be pretty careful about getting into that business. And back in our day, it was iron ore. Iron ore was the big bulk commodity, or coal, and that's because the the market is dominated by the big players. And so you have to have either the biggest deposit, the best deposit, the best economics, or the best grade, because otherwise you won't actually make it through the cycle. And we've sort of seen that over the years. Now there's been the market for, say, the smaller iron ore players, and a number of companies have done very well out of that over a modest range period of time. So I've always sort of shied away from that, from that area because of that. I mean, even lithium is a bulk commodity. I mean, when there's no shortage of lithium, around the world, and so long term, unless you've got the biggest, the best, and as we've seen, or first to market. So Pilbara, for example, were basically first to market, certainly in Australia, and they are now killing it, and they've got a dominant market position. So the thing about this particular project is that I believe that it's got the potential to be, one or if not all three of those things. The lowest cost, we can be a dominant producer, and we're going to be entering the market at about the time that a supply deficit is being forecast in the next sort of 3 to 4 years, in the industry. So from that perspective, it's a very exciting, dynamic marketplace, and it will become, I think, increasingly obvious over the next 3 to 4 years that HPA, and its related products are a key part of this revolution, and it'll have its moment in the sun.
I mean, HPA is effectively, high purity alumina, right? We're looking at aluminum type sources.
Yeah,
So, my thoughts is bauxite,
yeah.
obvious one. And when I saw your projects, it's this clay thing in a lake. How did that come about? I mean, if someone asked me to look for aluminum, that's not the place I would say to go look for.
Yeah.
So how did that come about?
So look, the deposit and also the process, which is all part of the unique combination of the Lake Hope project, were discovered by geologist Roland Gotthard, and Roland is now the project manager for the Lake Hope pre-feasibility study. And Roland looked at sort of the two main sources for HPA at the moment. So the current process, which is the dominant process that HPA is produced by, is by refining of aluminium metal that comes from the bauxite. Now that the metal itself and then the subsequent refining are basically quite a energy intensive and environmentally dirty process. The whole alumina process, aluminium process, produces large amounts of red dirt, the red mud that's pretty toxic, and there's billions of tons of that around the world outside the aluminium refineries. And then the second thing that's been over the last few years has been leaching of kaolin, hydrochloric leaching of kaolin. So there's a very significant difference in capex required, as well as operating costs, OPEX, between the Bayer process and the refined aluminium route versus the proposed hydrometallurgical routes, which includes our process, Alpha HPA, and a few of the other competitors in the space, are significantly lower capex and OPEX compared to the incumbents. And so there's a bit of a disruption sort of going on, and it's a race to get into production, to be first to market as the industry develops. So so Roland looked at this whole system and thought, well, what other minerals can we get aluminium out of, and came up with a variety of potential candidates, and then found a few specific minerals, and then designed a metallurgical process to actually extract that with sulfuric acid, and it worked beautifully in the lab scale. And then he thought, well, where am I going to find this mineral? And he decided, oh, this is where let's go and have a look in the lakes. And of course, that's where he found the deposit, and built it up himself to quite a significant level before we came across it, and that's an interesting story. And so here we are. So it's been an interesting road to get to where we are.
Okay, so I mean, all HPA. I mean, you've described several processes in the past, right? I've looked at companies with HPA, and let's say they have a very turbulent journey.
Yes.
And so, what makes you guys different, or I mean, it sounds simple, right? It sounds like a go and dig it up and everything else, and it's in a lake, So, what makes you guys different from that point of view?
Yeah. So look, for investors not familiar, you can probably classify the HPA players on the ASX into three main groups. The lead candidate and the absolute exceptional performing company in this space is Alpha HPA, code A4N, run by a guy that I know, Remus Karitis, and they've done an amazing job by commercializing the processing of a chemical feedstock. So 5-6 years ago, A4N, or Kohlrabi as they were at the time, had a nickel laterite project in New South Wales. They came up with a proprietary process, solvent extraction, to basically produce high purity alumina from this laterite project. However, during that process, they then discovered that they could use the same process to use a chemical feedstock and still produce high purity alumina and related products. And that chemical is basically a waste material from Orica, the large explosives and fertilizer company. It's a byproduct of their processes, and so they jumped out of the mining space and are now producing this chemical feedstock. Now, the capex and the opex for that process is going to be the same as other hydromet processes, so there's no advantage there apart from the fact they are significantly cheaper than the current incumbents, and so they're hitting it out of the park. So over the last 5 years, their market cap has gone from 20 mil, 15, 20 mil to pretty close to $1 billion, because they're now nailing contracts. They've done the hard work. They're producing material, not yet in bulk. This is only stage one. They've still got to raise the capital to get into the larger stage production to hit their end target, and that's been a huge success, and all congratulations to them for doing that. So that's the chemical feedstock. There's other companies. There's Chemex. They're trying to do a chemical feedstock. There's I've got the name of the company now, but some of the red dirt that we mentioned before, there's a company trying to produce it from that. So they're sort of non-mining products,
like the tailings from the traditional,
like the tailings from the traditional process, in through there. And again, regardless of the process, the thing to remember is that the capex and opex are significantly less than the current incumbents, the Sumitomo's of the world, who are the main producers. So the next group of companies are the kaolin producers, so FYI, Andromeda, etc. And they have struggled in that space. And I think the principal issue with that is the capex required to be able to scale up their projects. And also it's a sort of a 2 to 3 year process to engage with the end market, the end users of the product. They have to take the material, they've got to produce whatever it is that they want that they produce, they've got to test it, it's got to go through quite a rigorous set of physical and chemical processes to make sure that they can use it on an industrial scale. So there's that lead time, and that's a big issue for us that we're facing and moving forward. And but they've struggled really to gain traction enough to be able to raise the capital to certainly consider doing the larger scale projects. And then there's basically little old impact at the end in through here, and so we have a sulfuric acid based project, and we can talk a bit about the differences there in detail. And so that's one of the things that makes this project unique. It's at the front end where the mining and the processing are relatively cheap and relatively straightforward, which means that we have a chance of coming in of being one of the lowest cost producers, if not the lowest, who knows, and be able to produce material in bulk and be a dominant player in the space. And if you recall my comments about being in the industrial mineral space and bulk commodities, that's crucial to your success. And so that's really what we identified in this project. It has the potential to be that.
Can you give us an idea of the magnitude of capex we're talking about between the three sort of groups that you've just described?
Yeah.
I mean, are we talking about hundreds more, or are we tapping the billions more? Or
no, it's in the hundreds. It's in the hundreds of millions. So I think we're all waiting eagerly for A4N's definitive feasibility study. The one that they've already published was 2020, and depending on how holistically you look at that DFS, you're sort of in the high 200 US dollars to build the larger scale plant. Australian dollars. That was 2020 figures, so they've probably increased significantly since then. FYI, they were in a joint venture with Alcoa, and that was a 250 million US deal for Alcoa to earn 2/3 of the project. Obviously that joint venture fell over recently for whatever reason, but those are the sort of numbers that are in there. Look, it's early days. We will have a scoping study out once our resource is out, but we think that we're going to be at least competitive, if not very competitive, with with those numbers. So again,
I can't dig it out of you. ASX might not listen to this.
Yeah, you have to be very careful what you say nowadays when you go viral. So yeah, but the scoping. The scoping study had basically already been done when we looked at the project, because we're quite confident on the resource, even though it's only an exploration target at the present, and the numbers all make sense, so it's like, okay, we've got a real chance here to be, a leading player.
Would you expect yours to be lower than the other two, or
if everything comes together?
Yeah,
I think we can.
According to Plan A.
Plan A, we've got a real shot at being the lowest cost producer by a margin.
Yeah. I mean, that's why we got
There's
so many alphabets, right?
That's right. Yeah.
So so you've got this exploration target out there on your slide. So for the guys that sort of going, hey, this is sounding really interesting.
Yeah.
How do they look at the numbers and say this is good, this is okay, or how do they read those numbers? I mean,
sure. So the actual exploration target, we have to quote a range, as people are aware. So it's somewhere in the order of, about 2.5 million to 4.5 million tonnes.
We'll make it clear. It's not like it's there. You're hoping it's there.
In the case, that's in effect, that is the background to an exploration target. So what people need to remember is that we've already drilled it out at quite a density. We know what the assays are. We're putting the resource together, so we're very confident of the numbers that are going to come in. But the drill holes are only 1 to 2 meters deep, and so we've actually got pretty good confidence in where we're sitting. But we have to quote this range. But we're allowed to pick a middle figure. So let's call it 3-4 million tonnes, but the grade is quite significant. So alumina is Al2O3, aluminium oxide. It's high grade, which means it's sort of north of 24-25% alumina. and we're getting about 80% recoveries in that out of that material. Okay, so take whatever number I say, take 20% off. So the range of contained alumina is 600,000 tons up to about 1.25 million tons of contained aluminium oxide. So pick the middle number, it's about 1 million tons, of which we can unoptimized get 80% recovery. So it's about 800,000 tons of contained alumina in that in the deposit, and the average sale price for that material at 4N 99.99% is in the order of 20,000 US dollars per ton. So if you took those two figures together, you get a very large number.
Yeah.
The value in the top 2 meters of this lake. So it's really an extraordinary deposit in terms of the value that's contained in a very small area.
You mentioned the four ends and stuff there, and again, you have this slide there. They're just numbers to someone like myself, right? And from an investor goes, oh, that's a big number. That's a good thing, Can you give us a rundown on what that really means?
Yeah. So the term high purity alumina is exactly what it is. It's high purity. So whilst people produce alumina or aluminium oxide, down at the sort of the parts per million level, you can end up with contaminants in that material. And the normal ones are iron, maybe calcium, a few other bits and pieces in through there. And so the end use for the HPA, and we can talk about that, requires very high purity, because if you have more, and those purity levels are quoted as 99.9%, or three nines, or 3N, that's what it gets shortened for. And then 4 nines, 99.99, and then 5 nines, which you'll hear people quote, 99.999, is extremely high purity, because if you think about that, that's only 10 parts per million at 5 nines, and you're actually down at the level of analytical accuracy in through there. There's not many machines around the world that can measure the purity of a mineral to that degree. So you're kind of almost in quantum space by the time you get down to those levels of purity. And the price that's commanded in the market is determined by the purity. So 3N much cheaper, 4N, and that's the standard that general HPA players like ourselves, we normally use 4N as the benchmark, and then 5N, and then there's supposedly 6N, but we actually doubt whether that's a real thing or not. So so 5N, huge prices for 5N, but it then becomes how big is the market, and the 5N space is not that big, so you can't build a business on 5N. It has to be 4N and 3N, and then you might get a cream on top with 5N.
I guess 4N is the easy entry market. Is that how we could look at it?
That's correct, because that's the main use for HPA is at the 4N level, and it's mainly used in the LED industry and in the electric vehicle industry in batteries. So those are the two end user end markets.
And one of the things that sort of occurred to me when I was reading through your information was that you talk about this perfect deposit that you have. Well, what is not perfect? What is the normal challenges phase if it's not your perfect deposit?
Let's see. Look, we'll run through the quick advantages because
everyone's saying, of course, he's going to say he's got the perfect deposit.
That's right. I think one of my slides is this the shallowest, highest grade open pit anywhere.
Yeah.
So look, the advantages are that it's in the lake bed, and so it's basically almost biologically sterile. So there's no plants, there's no native vegetation in through there. There may be some spiders or something living in the in the top few centimeters, but within the lake bed itself, there's nothing living there. The pH is about 3. It's fairly acidic, and so it's not a particularly healthy environment for living flora and fauna. The deposit sits from surface down to 2 meters. It's almost like plasticine, and so basically it's a very simple job of digging it up and sticking it on a truck. So because of the grade, it'll go into a truck, and then we can take it off site. So from an environmental perspective, there's no requirement for permitting, for a processing plant. We just need, basically, I'm not kidding, like a digger and 2 trucks to put the material in, demountables around the lake, for a campaign mining. And the material is direct shipping ore, basically. Dig it up, put it on the truck, and then take it to an industrial yard somewhere in WA. We don't know where that is. So from that perspective, there's a huge number of advantages. The challenges always lie, in particular in the HPA space, in the metallurgy.
This is
So
the processing
the actual
side of it. Yep.
process, yeah. And then the other challenge is the end users, which we'll come to as well. So really, in terms of the perfect ore body, there's not much to fault about it, and that was the big thing. It's like we've already found, a deposit that's got billions of dollars of contained metal in there, and the challenge is now getting it out and getting it to the end user. So the metallurgical work. So far we've only done it at basically lab scale. It's been successful, but that work has all been not optimized. So basically, Roland did a lot of the initial work in his kitchen.
Yeah.
So it worked successfully there. We've taken it to ALS laboratories. They're working on it, and we're getting some initial work done. Gave us these sort of 85, 86% recovery. So now we're doing all the optimization work. Assuming that's successful, it's then just a matter of scaling that up. Can the process be scaled? Because it's a relatively straightforward process. We're only using a handful of chemicals. It's a matter of I'm not anticipating any significant issues because the chemistry is straightforward. It's not. It just needs to be scaled up. So it's not like we've got 15 different chemicals and complex plant. It's a relatively straightforward procedure, but that's where the risk lies. We've got to make sure that scales and we can produce things. And the other significant thing, going back to the deposit, is becoming aware of what the variability is in some of the contaminants in there. So we mentioned iron earlier and calcium. So those 2 metals are definitely there in the lake. Our initial work indicates that it's not coming through the process, but as you scale up, you've got to make sure that that's not the case. And then in these deposits, there's always some sort of surprise, unknown unknowns that come out. And we're working on those sort of things as well. That these lake systems are fascinating. They look fairly bland and boring, but each lake has almost got its own unique chemical environment, and so that's what's unique about Lake Hope in this particular area, is that it's led to this. The climate and the local rock type has led to this sort of fairly unique deposit there, and so it's a challenge just understanding the chemistry of them.
How consistent is the grade? I've seen a couple of your diagrams where you're almost mapping out 25%, 26, 27. Yep. Is that kind of scientific, or is it just happen that way
So
by nature?
No. So the lake, whilst it looks like a flat surface, obviously the lake is deeper in the middle, and so you'll notice that the higher grade portions are generally in the middle of the lake, and so the minerals that are in there are a range of evaporites, so evaporitic minerals. So there's been metals brought in from the granites, and then basically it's aerosols for the sulfur that's in there, sulfate. And it's been brought in by wind and rain, and the unique combination there has ended up precipitating out this very, very fine-grained material. That was one of the other advantages of the deposit I didn't mention earlier, is that it's naturally less than 10 microns in size. So there's no comminution required, there's no grinding. We literally dig it up and then put it into a wash and then put it into the plant. So it is a very consistent ore body on the drill spacing that we've done currently. That'll be enough for an inferred resource, but we're actually waiting for some assays now, which will probably take part of that to indicated. And again, it's fairly consistent. And you have to remember that I mentioned that we've got 800,000 tons, perhaps, of recoverable HPA in the material, subject to ongoing test work. We're planning to produce only mining 60,000 tons of that, a year. 10,000 tons a year of final product. So there's multi-decade operation in through there. So we're only going to be mining a small portion of it at a time, and so we'll be able to actually basically high grade the deposit. So all of the lower grade material will never, that'll never get mined in my lifetime, because there's more than enough of the material in the center of the lake where it's the thickest and it's the most consistent. So nature's been very helpful to us.
So when you look at the lake, obviously everyone says, "Oh, that's a big lake." I mean, sometimes when you stand on a lake, it's you go, "Well, this is a big lake." On a map, it kind of look like mediocre, right?
Yeah, yeah.
Is there, like you said, you in our lifetime, in your lifetime, you're only probably going to be that portion of
Yeah.
it. Is there more to it? Is there more lakes around that you think has, or the
So
uniqueness is?
yeah. So look, I've no doubt that the minerals, probably occur in the other lakes, and we've actually tested a few, but a lot of them have got material over the top, which is not, which is not great for the process. And so yeah, it's like I said, almost every lake's got its own individual, chemical uniqueness about it, and so the fact that we've found this lake and there's possibly one other, it's like, oh, this is fantastic. But just in case there are competitors thinking, watching, maybe we should get into this space, we've also got a patent on the on the process, and so we've got many years of test work behind us to get to this stage. So it's I think we've kind of got it locked up.
It kind of it almost sounds like there's a niche in your source. I think that's because of the way the lake is and how it's concentrated.
Yeah.
I think that could be that competitive advantage that people outside can't get over because it's unique
Yeah.
to that system.
That's exactly right. That where the lakes are is sort of encroaching onto the area, sort of Norseman, Haydn, Esperance, where there's been a massive, rare earth boom over the last, 2-3 years, and huge tracts of ground, pegged through there. And there are a unique set of granites through that area that are naturally elevated in rare earths, and then when they've weathered, they've produced all these beautiful rare earth clay deposits. I mean, there's, remember what I was talking about, bulk commodities? Well, rare earths are not rare, as we know.
Yes.
They're bulk commodities, and there's enough rare earths, in that region alone to supply the world for 1,000 years of rare earths. So again, they have to be first to market, etc., etc. So I think that's definitely a contributing factor. The metals that are in the lake, have come from this unique set of granites down there, and mixed with the aerosols, and Bob's your uncle.
So playing devil's advocate, what keeps you awake? Like, you wake up and suddenly, oh my goodness, if this happens, we're stuffed. So, what's the stuff that could, the hurdle that could be a deal breaker?
Yeah. Look, I think that when you're in the EV space, whether you're in the main metals, nickel, copper, lithium, or in the niche space like HPA and a few other minerals, we're actually in the technology sector. Okay, battery technology is changing at an extraordinary rate, and so you're basically in a space race. And so the biggest challenge or thing to be aware of over this sort of next decade is what materials are going to come in that could replace HPA or other battery metals, and are there new technologies coming in for batteries that might completely replace the lithium battery. And of course, sodium based batteries are a big challenge, and that fortunately that uses HPA, but it doesn't use nickel, doesn't use copper, doesn't use cobalt, all the advantages that Altec, with Iggy Tan there, talk about extensively. And so that's the big picture. We're not mining anymore. We're in the technology sector, and it's a race. Technology is changing so quickly. So that's the big picture. The second major thing is making sure that we can get in front of the end users. So because of the test work period that I mentioned before, then we have to provide trial product to them. That's got to then go through their rigorous testing process, and that will then and that can take 2 to 3 years at least to sort of establish those relationships, get the test work going, and then look for the offtake agreements that are required, to really bring in the income and get yourself up and running. So that's the two big things, and obviously the metallurgy that we mentioned previously. That's the that's the least of the three big worries, but those are the three: metallurgy, end user, and then the whole technology space that we're entering.
I guess somewhere along the line something falls off. It would be any problem for the likes of yourself. But if I were to summarize this, looking at it as an investor, whenever I look at a lot of people playing with downstream, I always wonder. They say, "Oh, the source is not a problem. I can source it from here and here." But in any business that I know of, where there's a vertical integration thought of, you want to know your source is yours and not maybe you'll get it. And I think when you're talking about your deposit being unique. That's why I asked the question.
Yeah.
Is there somewhere else where you can get that the uniqueness? And if the answer is no, then that's a really big competitive advantage for Impact going down that route. Would you agree with that?
Yeah, no, absolutely. I mean, and that's what I spotted, very quickly once I came across the opportunity. It was like, oh, okay, this is unique. It's going to be difficult for people to compete with us, geologically, and on a mining perspective, and then also now on the metallurgy, because we've got the patent, across the process, and that's an area that's got huge potential to also be disruptive for the industry and other methods that we're looking at to process the particular set of minerals. So at the front end, we have huge competitive advantages, and the end result of that will be low cost producer. And whilst it's a niche market with high margins, commodities are always about lowest cost over the long run, and that's the key point for us, going forward. So it's all about costs.
Yeah, I think like in every business model or concept, there's always things that will fall off the cart and cause issues.
Yeah.
Some detrimental, some not. But I think if you can pick up the competitive advantage parts of your business, you're sort of one step ahead. I think that's what we're kind of alluding to.
Yeah.
Because Impact might be a billion or staying at 30 million.
Yeah, that's right. Yeah, I know which way I want it to go. But,
yeah, I think most of your shareholders want it to go the other way.
Yeah,
but at least it's given you sort of a few leg ups on your journey, right?
Yeah.
In terms of news flow, what could people be looking for going forward?
Yeah. So look, we'll have the resource out, or at least an initial resource, by the end of this quarter, which is rapidly approaching. Most of that work has been done. We've just received part of the last batch of assays that we're kind of expecting. So we're probably just going to wait and just do it all in one hit, rather than a smaller resource and then increasing it. We'll just do it in one hit. So the resource will come out. Once that's there, we'll then be able to put out the scoping study, and we're having that revised as we speak. We've got a financial modeler that's come in as part of the PFS team, taking all the work that Roland's done and putting it into more formal, scoping study status. And at that point, then people will be able to see the value. People can do the calculation in their head, but they'll be able to see the value then that's there in this project. And I think one of the great things then is that analysts will actually then be able to put like a target figure on us, say, if this thing works, then in 5 years' time, there's a chance that Impact might be worth X amount, because they can put the numbers then into their own financial models themselves, and that's how analysts work. So get recommendations. So the scoping study, and then that'll be in the next quarter, along with the
completed in the next quarter.
Yeah, completed in the next. We've basically done it. We just need to put the resource together, an official resource, check the figures, that we're okay with it, and then we should be able to put out the scoping study. And then we'll also lodge the mining lease application. So because of the low environmental footprint, our initial advice is that this should be relatively straightforward. We don't need water.
Famous last words.
I know. So I've known over the years, Noel, not to overpromise on crucial things, and this is one of them.
Yeah.
Look, there's still a chance there might be some rare fauna, living in the lake that we're not aware of, so that's one of our big things, going forward. So once the mining lease application is lodged, then it just sets in train then the whole approvals process, which is mostly environmental studies. We're engaging with the Naju people for a bigger heritage survey. We've got an important meeting with them in the next couple of weeks, because it will be, basically there's a deposit there already. So that's an important factor for us to consider, and we're very we're looking forward to engaging with the Naju at some, in some detail now. And so we're hopeful that the approvals process will be relatively straightforward and be able to sort of go through on the shorter end of the time period. So we're talking, 2 to 4 years rather than 5 to 7. If we were doing a cyanide plant, if we were doing a, HCl plant on site, we have none of those issues. So in terms of the mining, that's relatively straightforward. And then the other thing then will be just the results of the metallurgical test work as that comes through over the next 6 to 12 months. So yeah.
I mean, before I go to the part where you sell your soul to the shareholders and potential shareholders, I just want to put something for your thoughts. Like most of the stories we get, there's a journey to where you are now, whereas you're almost stepped into it. How much of an advantage is that for you as the MD and your shareholders and the people who are funding you? Because I think you just recently raised 4 mil.
Yeah.
Do you guys step back and start pinch yourself that you've walked into something so advanced in the stage?
Yeah, that's a good thing. We've certainly leapfrogged.
Yeah,
We've leapfrogged the discovery phase. Of course, normally during the discovery phase, the share price goes up and then sort of comes back
you're in the
into the
valley of death.
That's right. We cut through the
Yeah,
valley of death. And look, I can be upfront. People know me for being upfront. Metallurgical results are not the sexiest thing to be putting out into the marketplace. And so I think this story, and it's already reflected in the way our share price has gone. We had a bit of a kick, but we've seen a gradual increase. We've doubled now.
yeah,
From 0.7, 0.8 to 1.3, 1.4 in through there, because this is more of a slow burn story. As we get this, as we educate the marketplace, people can see the advantages of the of the project up front, and so we can we've got then the other things at the end of at the back end. People can see that we're working on those. So provided that those results keep coming in positively, people will see that we have the chance to be the next A4N, and get the share price moving slowly and gradually in the right direction. But it is another reason that we still have our other projects, which we won't dwell on. We've got the Explore. We'll have some results from that coming forward. There's no drilling there. But we mentioned our Arkan project here in the Wheat Belt. That we're still maintaining that project. We're going to be able to provide ongoing exploration results. And forgive me for going on a little bit about the advantages. The other advantage of the whole metallurgical test work and the nature of the deposit is that the money in the PFS is in the order of a few $1 million. It's not tens of millions of dollars like De Grey, going through their massive pre-feasibility study. We're talking millions and millions and millions of dollars to get the PFS done, as is a few million. So that allows us, with the money that we raise, to actually continue exploration and also provide some exploration results whilst we're in the development stage of the Lake Hope project.
that's what my point is. I think I like about the potential here is that for a little bit of money you can advance a lot. And I mean, in this market here, I mean, what I call this is the norm of our market.
Yeah.
The last 2 years was a honeymoon or a anomaly in
Yeah.
our market, because everyone suddenly thinks that was the norm, whereas I've been through this, and this is the norm, right?
Yeah.
This is our comfort zone, you want to
Oh
call
my
it.
goodness. Yeah.
But this is kind of stuff that I always tell my guys, look, you look at these kind of projects, you got to look at the project technical, and you look at the guys running it, and then take that position when you feel comfortable.
Yeah. Yeah.
But this is the kind of stuff where the uncertainty of the resource has passed.
That's right.
Now I mean, everything is a challenge, as we know, in our industry.
Yeah, absolutely.
But at least this is, you can see the comfort. And bulk commodities work.
Yeah.
Not sexy. I always use food for an analogy. It's
Yeah,
like
right.
selling noodles, right?
Yeah.
Everybody eats noodles.
Yeah.
You make that noodle taste a bit different. It just doesn't work.
Yeah.
But if it's the standard stuff, your pasta, thing sells all the time.
Yeah.
So the next step, what do you say to the guys out there? Why impact? Why should they look at impact?
Yeah. Look, we are on the road to development, and with its attendant risks. But there's far less. It's far less speculative now than it is in the exploration stage. But I mean, all the people that have invested in impact over the years understood, or should have understood, the speculative risks there. And I'll just take a step back, about where we are in the norm. I mean, it, we've kept Impact going. We listed in late 2006, so the next 2 years were the GFC. Then we had a couple of good years, golden years, sort of 9, 10 into 11, and in 12 it started to turn, and then we had 5 down years, which were just terrible.
Yes.
We had a little lift, gold and lithium back in 2017,
16,
18,
yeah.
And it was interesting that 17, that previous period, 18, was actually one of the worst times. That was a death by 1,000 cuts. And in 19 started to pick up, then COVID, then we've gone through the honeymoon. And look, if I've done nothing else, I've kept the company going, all of that time with great support from the board, but also our shareholders, in particular, 2 German groups. And if you'd have seen, the 2 German shareholders, one in particular, contributed significantly to that $4 million dollar raise that we did. So normally placements go to a wide range of sophisticated investors. In this case, we did 3.25 million of the 4 out of that 2 German groups. So those shares are not coming onto the market, and so that was a huge vote of confidence, because that major German shareholder is a large family office in Germany. They're amongst Germany's wealthiest sort of families, and they understand a wide range of industrial. They're an industrial conglomerate basically. So that was a massive vote of confidence that we're on the right route from our the support from our major shareholders. So so going forward, we're very excited about the next steps. Yeah.
These German groups are not the same ones that invested in Altec?
Okay, so the second German group is. So we actually have one of the same major shareholders as Altec, and so that shareholder helped them list in Frankfurt, and was sort of also pivotal in sort of getting them into this the factory. Now they're building their gigawatt factory in Germany, and all credit to them. So there's a lot of synergies in that space as well between the shareholders. So that was a good spot. Yeah.
Yeah, I mean, not many people support HPA and you got the guy that wants your product. That's always a good sign.
Yeah, well, fingers crossed that we can do a deal with him.
Yeah. Look, Mike, fantastic. I'm glad. HPA is a very niche topic. Not many people talk about it, and I really do feel that there's a lack of understanding of what it is. If you break it down to just simple bulk commodity and high-end product, I think it makes simpletons like us understand. But look, thank you for coming, sharing your story. As gratitude, we got some coffee beans for you, and they're supported by Florence Drummond. Is been a big support of us, and she's got Indigenous group. They're a group of companies that support our industry from the Indigenous side of things. So they have a coffee products called Kick, and that's our giveaway, because we're coffee with Samso.
That's excellent, and we look forward to kicking the Impact share price along as well as we go forward.
All right, thank you.
Thanks very much.